What is going up, guys? I hope you guys are all having a fantastic day today. So in today's video, we're going to be talking about the gap and go strategy. This is a very common strategy. It's not too complex. And we're going to be talking about where to set our stop losses, how to find stocks, and everything along those lines. So pretty much what the gap and go strategy is when a stock is gapping up more than 4% during pre-market hours, you look for continuation throughout the day. You might be thinking, well, Carter, if it's gapping up over 4%, shouldn't we have a sell-off? Well, normally, many traders and investors don't start trading or investing till the market's open. So this is where we get that continuation. And as traders, we just want to get in and out of a stock fast, easy, and with little risk possible. And the gap and go setup has a very good opportunity for all of that. So the first thing I look for is a gap up during pre-market hours. Now this is LMFA. This stock went from 40 cents all the way up to around 6.40 or $6 in that ballpark. And the reason why it did this is because it was a reversal split. So it did have some sort of catalyst. Catalyst could be anything from news, earnings report, anything along those lines that gives that stock extra volume and is more intriguing for traders and investors to get in and out pretty much. So, this had a pretty good catalyst here. It was a recent reverse split. That's why the stock went up. And reverse splits are when a company offers less shares and it drives the price of the stock up. Because if you're a company and you're offering 100 shares and then you suddenly cut back to only 50 shares, those share prices that you have for the 50 are going to increase in price. So that's what I looked for today. This one came up on the gap scanner this morning. Let me pull it up here. Watch list. All right, so this was it this morning right here. This wasn't this morning. I was gonna say this was this morning. Yeah, so this was gapping up, over 15% when I looked at it, and obviously that's a lot more than pretty much. It gapped up a lot more. It was like 700 or 1,000%, but when I looked at it, it was around 15 here. And then this is our top gapper today, and the reason why I did not like this stock here is because of the volume. The volume was crazy. You wouldn't have been able to get in and out of trades. If you look right here, the 405.8 is a very large amount of volume. So I did not like that. I didn't trade it, and I looked for a trade off here. But all right, so this stock gapped up more than 4%. That's what we look for. And the next thing we look for is maintaining pre-market highs. This is where many traders don't understand why some stocks are good and some stocks are bad when they gap up. So this stock gapped up and it immediately did not sell off. So as you guys can see, it came when the market opened. It opened at around $6. So that's pretty close to that 650 area where the pre-market highs were. So as you guys can see, it gapped up, and now what you want to look for is a possible play over the pre-market highs. Now this is when a stock, pretty self-explanatory. I don't really have to, tell you guys. So if let's say the pre-market high was, 650, I would hop in at 651. I'm waiting for a break over that pre-market high for traders to do a resistant breakout strategy. That's another name for it. So right here it broke out, and what you would do is you'd hop in at 651 and ride that momentum all the way up, wait for a pullback. Now pullback could have been right here. Most likely I would have hopped out around that $7 mark or even that 750 mark, because that 750 mark all the way here is around 15%. So that's a pretty good profit ratio here. Also, what this stock had going for it is it was riding this 20-day moving average line very well. As you guys can see, it almost tapped it here, got bought back up, tapped it here, came back under, and right when the market opened, boom, used that as a support and pushed it all the way up. So you really could have got in at that $6 mark to predict the pre-market highs. I just felt like that risk to reward was a very outweighed the profit for the potential profit, I guess is the best way to say it. So what I did, I hopped in 651, rode that momentum on the first pullback. You can either get out, or what many traders look for is a bull flag. This one didn't flag out. This one, the reason why is because this candlestick was the telltale. If this one would have either consolidated more or had a shorter spread, it would look a lot more intriguing for buyers, and it just didn't. It kind of consolidated here and got sold off. So you sell in the first pullback. Now this could be anywhere from 750 all the way down to 688 really, because you never really want to take a loss on a trade that you're up and you're confident in. And if you guys know that stocks tend to bounce towards half dollars or whole numbers, so $8, that's used it as a very strong resistance now, is that $8 mark, so that when that stock bounces back up, it's going to have a harder time breaking over $8 than anywhere else on the stock chart. So you always got to keep that in mind. So that's why I would take profit at around 750. I would sell half at $6 or $7, because if I would have sold half, that would have been, right there would have been a 7 or 8% profit, and then the other, 10% or however much it was, you could have had smaller share size and definitely made a lot of money off it. So it would have been a very easy trade. Now you might be thinking, okay, if you hopped in at 651, where would you set your stops? I would set my stops right under this, at around that 640 area. In between there, I would try to do a 3-to-1 profit to or risk to reward ratio, meaning I would risk $1 to make 3, or 1% to make 3%, is another way you can look at it. So it's not too complicated here, and the reason why I would set it in that 140 area is because that if that stock breaks through this resistance, it's most likely going to fall down. So it broke through, got bought back up, continue to consolidate. That's what I don't like. I would rather have it break over and continue to ride up. But since it consolidated here, I did not like that. And I knew that this stock, with it being a reverse split and a gap up, that it was most likely going to fade off because it was up so much that we were going to have this little burst of energy of traders to get in and out, and then we'd have a sell-off. I knew that going into it, so I had to be quick and easy with my trade, and it obviously paid off for me. So, this is the gap and go setup and the gap and go strategy. If you guys have any questions, you guys can either leave a comment or you guys can join the chat room here and leave questions or any sort of information that you guys want me to look at, any stocks you want me to look at. I will gladly do it. So that's it though. I hope you guys enjoyed this video. Please sure to like, subscribe if you're new, and that's it. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week. And let's finish up this week strong, and let's try to use this strategy to the best of our advantage. All right, guys, take care.